Let's talk about the markets in 3 minutes. So a sea of green on the GMM behind you, plenty of risk on evident. How concerned are you or excited are you by what we're seeing in Japan? Japan once again stands out as a real strength area for equities. Is this sustainable?
I think short term, it's probably the market that's looking most stretched. I did warn that nothing on the board is looking stretched this morning, but Japanese stocks have already closed, and that's why they're not showing up there at the moment. They've had another great day of gains and a really extraordinary start to the year. Overall, yeah, I do think it's probably sustainable. I am, remember, not in the camp that the BOJ will rush to tighten, and they'll not tighten much this year, even if they will probably tweak policy a little bit towards tightening. And therefore, I don't think we're going to get the big yen gains that most of the market thinks. And I think that'll remain supportive for stock market where there are corporate and structural reforms happening. So I think Japanese stocks can overall do well. And I will emphasize again, as I've talked about for the last few weeks, since that Fed the pivot in mid-December, I think that we're in this Goldilocks scenario which lasts until we get a whole sequence of data to derail us in either direction. And at the moment, we're not close to that, which means for now, we've got at least another few weeks of generally risk-on mood. Japan is probably the most stretched in the short term, but I think the overall backdrop is good for global stocks, so I wouldn't fight anything too aggressively.
OK, talking about fighting, the PBOC looking to fight any link that the market wants to make between weakness in the yen and weakness in the Chinese currency. They don't want the dollar to take off in a similar fashion. What do you make of the latest pushback from the PBOC?
Yeah, it was quite an aggressive fix, and it really needs to be seen in the kind of the broader matrix of what support the PBOC is offering. Next week's a big week for the China story. We know that's been the one kind of real fly in the ointment of the last couple of months. Yes, the start of the year has been tough globally, but that's because we had an incredible November and December for global stocks. Of course, Greater China has really been suffering, but next week we're expecting to get an MLF cut on the Monday, and we've got a big data drop on the Wednesday of where the data will be headlined very strong because the comparison period might be misleadingly strong, and maybe that will change the kind of sentiment around the Greater China story. But that's the one bit that's struggling, and the PBOC's strong fix today is just a kind of another marginal incrementing of that idea of the government's providing support. Are they providing a bazooka? No. Are they providing sufficient? It's debatable, but they do continue to provide a little bit of supportive market at the margin.
More broadly, Goldilocks, the Goldilocks scenario for US stocks, you see it continuing, has some weeks to go.
Yeah, look, I think everything that's going to upset it from here is only going to upset it short term until we get a clear new narrative. One of those narratives being the economy's so strong, well, the Fed's actually going to have to tighten again, not cut next. Or, oh, wait, the economy's actually going into recession after all. We're not close to either of those scenarios because we're seeing growth forecasts this year actually be upgraded over the last few months, even though it's a growth slowdown since last year. So which means we're right in the middle between those two narratives, which means we need a whole sequence of data prints to get us either way. And that's why I think the Goldilocks scenario lasts at least until late January, but perhaps much longer.